Hello and welcome to another episode of the For the Property Investor podcast. And of course, we have the weekly news segment here with the only man who brings us the news is Nick Bendel. Hello, Nick.
Hello, Owen. This is always my favorite part of the podcast, probably because it's the only part of the podcast I'm involved in.
Well, that's true, and you know what? It's one of my favorites. It's my only favorite weekly part of the podcast.
Excellent. Well, I'm glad it's one of your favorites. So you're not committing to it being the favorite. You're
Well, it's
just
my only
putting me on the list.
weekly. It's my only favorite weekly segment.
Okay, so of all the weekly chats you have with me, this one is your favorite.
Yes,
Okay, well, I'll take that.
on the
Little win.
podcast at least. Yeah.
Okay, well, you got to take what you can get. That's a little victory. I'm taking it.
Very good. How's your week been?
Well, my week has been very good. Not just me personally, but my business, Hunter and Scribe. Hunter and
Yep.
Scribe, for those who don't know, it's a copywriting agency that writes content for finance and property professionals. We work with dozens of mortgage brokers around Australia. And over the past week, we've helped our mortgage broker clients with everything from blogs and social media posts to email newsletters and media releases.
Very good. And your services are highly recommended, not just by myself, but several people. So yes, it's very good service you offer there, Nick.
Would you agree that of all the copywriting agencies called Hunter and Scribe, that we are the best?
No, I would go even further to say that of all the copywriting agencies that specialize in looking after the financial services and real estate industry, you are the best.
Well, that's very kind of you. When you said no immediately to my question, I'm like, wait, does he know other Hunter and Scribes that he thinks are better? Where's he going with this? But you did save yourself with the rest of the sentence.
Oh, thank you. Thank you. Yes, I wanted to get you worried and then, bring you back up again.
And how has your week been and Leafield's week?
We've been, it was a good week. Lots of changes still happening in our business from all of the growth that we've had in the last year or two. So some team member changes. We've got with some additions, and we've got one team member coming back from maternity leave today. So that'll be good. And it's the team's growing and changing. So lots more growth to happen this year.
Well, that is exciting. And part of growing a business is that you've got all these things you've got to constantly manage. Growth never happens without a lot of hard work and without juggling a million balls at once.
Yes, exactly.
Well, shall we move on from the very entertaining chit chat into our three news stories?
Yes. What's in the news this week, Nick?
Our first story is changes to HEX rules could help more Australians buy a home. The federal government has announced changes to how student loan debt is assessed in home loan applications, making it easier for some borrowers to qualify for a mortgage. Currently, banks treat HEX or help debt like any other liability, factoring it into serviceability tests and debt to income ratios. This can reduce a borrower's borrowing capacity, even though student loans don't require repayment if the borrower earns below a certain threshold. Under the new rules, lenders will be able to exclude HEX repayments from serviceability assessments if the borrower is close to paying off their debt. Excluding HEX from debt to income ratios will also allow some home buyers to borrow more. And the federal government has given banks permission to exclude HEX debt in their serviceability calculations under certain circumstances, as we just heard. Is that a good idea or a bad idea?
I think it comes down to the individual circumstances of the borrower. If they're coming to the end of their of being able to pay out the debt, and it's no longer going to be a serviceable debt in the near future, then I think that makes common sense that they don't need to include it. If they've just come out of their tertiary education and they've got a huge debt that and they're in the process of and their income is where they need to be making repayments, requires them to make repayments each month, then yes, it should be used, taken into account for serviceability. So uh, good, bad, it's really comes down to the financial situation of the individual borrower.
One of the recurring themes of the 2.5 years the Albanese government has been going, and hello to Anthony Albanese, who we know is a keen listener of the podcast. One of the recurring themes has been housing affordability. Do you think this is a serious policy reform from the government, or is it just a political move so they have a talking point in the upcoming federal election?
Yeah, it's just something nice and fluffy to be talked about in the news, in the media, just like we are, to make them go, oh, isn't that nice? They're helping people being able to buy a house. But yeah, is it really going to make much of a difference? To some people it will, but to the vast majority of borrowers, no, it won't make a huge difference at all.
I know you've got 25 years industry experience, not just with property management, but you've also been a broker itself. So you've been around a while. You've probably seen that lending regulations tend to move in cycles. First, they get tighter, then they get looser, then they get tighter again, then they get looser again. Do you think this policy change by the government is ushering in a move towards a loosening of other lending regulations?
Um, Wouldn't be surprised, especially coming into an election year, and which could only be uh, uh, 2 to 3 months away. In fact, that election. So if it means that they can help people borrow more to be able to buy their home, that makes everyone feel warm and fuzzy. So it's yeah, wouldn't be surprised.
It's interesting. If the government or the opposition want to loosen lending regulations, I guess it depends on what the goal is. If the goal is to improve affordability, we've discussed in the past that that's unlikely to work, because if you just increase demand without addressing supply, that will worsen rather than help the problem. If, on the other hand, you believe that lending regulations are too tight and people should have easier access to credit, and if therefore your sole goal is just to give easier access to credit for the sake of easier access to credit, then I suppose it would make sense.
Yes, if their goal is to push prices up, then make it easier for people to borrow money. It's that simple.
Let's move on to our next story. Buyer activity trending down. There's been a reduction in the number of buyers in the market, judging by the latest home loans data from the Australian Bureau of Statistics. While the number of loan commitments increased 7.2% over the year to December, it decreased 0.4% in the final quarter. That suggests the market was quite strong at the start of 2024, but then cooled towards the end. Investor numbers tell a similar story. The number of investor loans rose 13.2% over the year, but fell 4.5% over the final quarter. So, Owen, as we heard, home loan volumes fell 0.4% in the December quarter. Do you think that reduction was simply a short-term anomaly, or do you think it accurately reflected the decline in buyer demand?
Um, we'd be probably looking at definitely a reduction in buyer demand, um, with interest rates getting to the point where everyone's sort of waiting with bated breath of for an interest rate drop, um, and so that they might be able to borrow that little bit more money to be able to buy that property that they're looking for. It's probably a bit of holding off there, and maybe just some buyer fatigue of maybe they're waiting for prices to drop some more. So it might be a bit of a holding pattern. And because interest rates have been so flat and property prices have been flattening off, and talking in general across the whole market, there are definitely exceptions. So yeah, it's probably a wait and see from the buyers um, uh, out there in the marketplace at the moment.
So that question was about all buyers. I'd like to ask you the same question, but this time for investors. Investor loan volumes rose 13.2% over the year, but fell 4.5% over the final quarter. Was that just a short-term blip, or is investor activity actually falling?
It's definitely not something that we're experiencing. Investor activity probably fluctuates a lot more than the general market. So it's probably a short-term anomaly, but we're seeing still a lot of investor activity out there, and but investors are also wanting to wait and see what happens with interest rates, and also where maybe the next best market is to buy. So yeah, it's so I'm having a bet each way a little bit there, Nick.
Speaking of interest rates, we're recording this the day before the RBA's meeting. And by the time people listen to this podcast, it may very well be after the RBA's meeting. Last time I checked, I think it was yesterday or the day before, the market was pricing in a 90% chance of a rate cut. It had previously been 95%, but now they think 90%. I reckon we should make our personal predictions ahead of the meeting. Listeners will probably know the result by the time they hear this. What do you think is going to happen?
Oh, I still think it's 50-50.
Okay, you're going to have to
It's
get off the fence. Give us a prediction.
no, it's like I'll honestly be surprised if they do cut rates. Even though it would, it would be very much welcome. But I would be surprised. There's still inflationary pressures and inflationary concerns from not just locally but internationally. We've seen all other markets that have cut rates are starting to see inflation start to spike again. We've got a very conservative Reserve Bank governor and board at the moment, so it's I'll actually be genuinely surprised if they do cut rates tomorrow.
So the market is expecting a rate cut tomorrow. All of the big four banks have also predicted a rate cut. But like you, if you look at what the RBA has been saying over the past year or so, if we're to take their word seriously, if they take their word seriously, they cannot cut rates tomorrow because they've said they want to wait until they've beaten inflation. And according to their commentary, they don't believe they've beaten inflation. So based on the RBA's criteria, they won't be cutting rates tomorrow. So I'm expecting rates on hold.
Okay. Well, we're generally in agreement there, Nick.
Okay. Well, I am going to be very, very curious to see what the actual decision is. Now, speaking of the big four banks, our final story today, NAB boss explains how to improve affordability. NAB Chief Executive Andrew Irvine has said that anyone wanting to improve housing affordability should recognise that, quote, 95% of the issue here is supply. If we can get more...
Hang on, Nick. Say that again. I don't believe it.
95% of the issue here is supply. If we can get more houses coming onto the market, that will provide more opportunities for people to enter the housing market, he said. Irvine said there were three things we could do to increase supply and therefore improve affordability. 1, start more construction projects. 2, import more immigrants with construction skills. And 3, make the planning process faster and simpler. If you don't fix supply and you add to demand, all you'll do is increase prices, he said. Owen, is Andrew Irvine right to say... So is the affordability problem 95% due to supply?
Drum roll. Yes, it is. It's yeah, it's the only thing I've been banging on about. We've been talking about for the last 12 months. It's all about supply. You fix the supply, you bring in more migrants that have construction skills, and you make the planning process faster and simpler. It's it's really that simple. There's a three-step process, um, and it's the only way to fix the problem.
So you're saying that the problem won't be fixed by incentives that increase demand?
No, because that'll make the problem worse.
Okay, interesting. Now, just kind of teasing apart what he said, I mean, the first thing he suggested that we need to start more construction projects. I suppose so, but that's maybe a function of the other two things he said. Firstly, he's saying that we should make the planning process faster and simpler. I'm guessing you'd say that would be a good idea, but is that realistic?
Um, to make the planning process faster and simpler, I mean that should be the first step, and it has to be realistic. Like if anyone can make it happen, it's government in general, on all levels, that can make the process faster and simpler. They're the only ones that can fix that. And it's we can't really start more construction projects without having a planning process that's faster and simpler. Um, and if we don't have the immigrants or the construction workers in general to be able to work on them, then we can make the processes fast and simple as we like. But if we don't have the workforce to be able to build the things, to build the projects, then that's not going to happen either. So
Mm.
it takes all three, and I think we need to start with number three, which is make the planning process faster and simpler.
Okay, well, that we then move on to his second recommendation, which is to import more construction workers. Right now, we have a shortage of construction workers. So he's saying that we should bring in more immigrants with construction skills. So I'm wondering, just for your personal view, do you you mentioned that you think that's a good idea? Do you think we should increase the number of immigrants we accept into the country, or do you think we should maintain it at its current level, but just make sure that a higher percentage of them have construction skills?
Um, for me, whether we increase uh, immigration or keep it at the same level, it's semantics to me. It's really comes down to the type of people that we're importing and allowing to immigrate here, and it should be the priority on construction workers, skilled construction workers, and there would be other skilled uh, migrants that we need as well in other industries. So they all need to be a priority. But one of the highest priorities should be for skilled construction workers.
But we probably don't need to bring in any more property managers or finance copywriters, because I think we're set with those.
Yeah. Well, we could do with some more property managers, but it's but yeah, as far as I'm concerned, yes, don't need any more copywriters uh, in this industry, at least.
Well, thank you very much, Owen. Always love our chats. And it's interesting with an election campaign just around the corner. I think many of the things we've been discussing today are going to be themes of the election.
Yes, they will be, and so it'll be interesting to see in the coming months as we get closer to that election, whenever it does get called. Um, It's because it's obvious that the electorate and the Australian population is quite unsure of what or who can actually fix this issue. But it's fairly obvious that a lot of people are convinced that the current government is not doing enough to fix it. So yes, it'll be interesting times.
Well, I predict that our next Prime Minister will be either Albanese or Dutton. You heard it here first.
Yes, well, as they say, no matter who you vote for, you will get a politician.
Indeed. On that note, Owen, great to chat. See you next week.
All right, see you then. Bye.